Assalamu alaikum. Guys, today we will discuss about the role of insurance in risk management. Insurance is a valuable risk management tool. Few organizations have the reserves or funds necessary to take on the risk themselves and pay the tool's cost following a loss. Purchasing insurance, however, is not a risk on the risk management system. A true and thoughtful risk management plan is the commitment to prevent harm. Risk management also address many risks that are not insurable. So guys, including brand integrity, potential loss of tax attempt status for volunteer groups, public goodwill, and continuing donor support. Risk management process. Risk management process is the risk analysis, risk identification, risk assessment, and risk planning and risk controlling. If we talk about risk analysis, so guys, risk analysis is the process of identifying, analyzing, and communicating the major risk. Risk analysis involves number one, risk assessment, number two, risk management. Number one, risk assessment, number two, risk management, and number three, risk communication. These includes in the risk analysis process. Once risks have been identified, they must then be assessed to their potential severity of impact, generally a negative impact such as the damage or loss, and two, probability of occurrence. These quantities can be either simple to measure in the case of the value of a lost building, impossible to know for sure in the case of the probability of an unlikely event occurring. This process is known as the risk analysis. In the assessment process, it is critical to make the best educated decisions. In order to properly prioritize the implementation of the risk management plan, risk planning and control. Control. Once risk and identified and analyzed, it is important to plan and adopt a suitable strategy for controlling the risk. Risk planning and the controlling is the stage which comes after the risk analysis process is over. There are five major methods of the handling and the controlling the risk. So guys, if I talk about evidence risk attention, so guys, I'm sleeping, you will don't mind, because it's too late. I'm making a video for you, just talking about your risk and insurance policies. So how these are harmful for us. And number two, risk retention, and the number three, risk transfer, and the loss control and insurance. Risk evidence is one method of handling risk. For example, you can avoid the risk of being picked product in metropolitan cities by staying out of them. You can avoid the risk. You can avoid the risk of the divorce by not marrying a career employee who is frequently transferred can avoid the risk of selling a house in a depressed real estate market. Owning a business firm can avoid the risk of the being used for a defective product by the producing the product. But a practical matter, not all risk can or over should be avoided. For example, you can avoid the risk of the death or the disability in a plane crash by refusing to fly. So now, if but a person may have the necessary skill and the capital to be successful in business, and the risk evidence may not be the best approach for him for to follow in this case. So guys, we will discuss in next videos about our risk retention. Thank you guys.